Yeah, welcome, welcome, welcome. Let's look at market structure in this video. Let's look at market structure. If you are a newbie in Forex, you can actually start learning with this channel. Okay, now the market actually goes in three directions. It goes in uptrend, which is movement going upward, and with that, it's making a high, a low, a higher low, higher high. That's the movement of an uptrend, higher high and higher low. But the second one it's downtrend, and downtrend it makes a high, a low, lower high, lower low. So the movement for a downtrend is lower high and lower low, but that of uptrend is what higher high and higher low. And the third movement is what we call the ranging market, where the market moves in same range. It goes up, comes down, goes up, come down, goes up, come down. Let me mark um let me mark an example of a range so that you see. Now this right here is a range, right? Whereby the market is neither going upward or downwards. Do you understand? So this is the ranging market. So this is the three market phase we have in Forex, the movement. Now, the market can actually move in a range, but not like this. It can just be moving, um, let me see. It can just be moving in a zigzag, 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 zigzag like this, going up without making a significant highs or lows. Do you understand? I'm trying to see if I can get an example. Okay, look at this, like this, right? It's ranging, but doing as if it's coming down, right? But it's still like a ranging market. I don't know if this is good enough, but this is also a ranging market, the straight one. Okay, so majorly let's just see how we can identify our uptrend and downtrend, because as a trader, as a beginner, it's not advisable to trade the ranging market. Instead, it's better for you to just trade either the uptrend or the downtrend, the bull run or the bear. So I'll just use a box to identify my highs and my lows, right? Okay, so let's start. Now, this is a low, right? Now, this is a high. Sorry, let me get my box again. And this is a high. Now, for you to actually identify your highs and lows, you need to look at um you need to look at swing. That's what we call swing, where after the market moves and it actually reverse. This is a swing. You must actually look at the significant swing. Now, there are candlesticks that enable us to actually identify a swing point. We have single pin, double pin, triple pin, top or bottom. We have engulfing candles. We have railroad tracks. Now, this is an example of what? A single pin top, right? This is an example of an engulfing. Engulfing is when you see your bullish candle, then a bearish candle close it like the top and the bottom of your bullish. It's closed by what? Your bearish candle. Now, this is, if you look at this now, is what? A bearish engulfing. So this is an engulfing candle. It's actually a nice spot to locate your swings, your swing point. Do you understand? Now, this another swing point. This another swing point. Now, this is a swing point. Now, if you look at it, it's the same level. So we call it equal highs. This is an equal high, right? This is an equal high. I'm just trying to locate it um, randomly, right? Now, this, if you look at this what? An engulfing pattern here. So these are our points again. This one is what? The bullish engulfing because it engulf upward. Now, if you look at this and this, it's actually the same level, right? But if you trace it very well, if you trace it very, you see it's not really exactly the same, right? It's not. So let's keep marking our points. Now, this is a railroad track. Railroad track is when the two candles are at the same length. So this is a swing point too, right? And this is also a swing point, the same level with this. So we extend it, right? Is also a swing point. This is a swing point. Okay. Now this is a swing point. This is a railroad track. Consider two candles, right? So now, if you look at this movement from here, it creates a high. We'll remove this. It creates a high, right? Then it creates a low. It creates a high, then it creates a low, then it creates a high here. It creates a low, creates double high here. We're trying to mark our points. Where's our swing? Hmm? This is a swing, right? Is it a swing? This is a swing, right? Two small candles, railroad tracks as well. The same high. So if you see this movement, high, higher, low, because this is a low, right? This is a high. This is a higher low. This low is higher than this. That's why we call it higher low. Then this higher high because it's higher than this previous one. Higher low is higher high. Okay, this higher high. Sorry, let me take it off. Higher high. Then this is equal. Then this higher. Then this low, higher, low, higher. This equal, right? So majorly, this will tell you that this is an uptrend movement, right? Uptrend, uptrend, uptrend movement, uptrend, right? Then this fails to take out this, right? But it didn't take out our low. Now, if unless this low is taken out, it's still an uptrend movement because this is the previous low, right? Except this low is taken out, it's still an uptrend. So it created this, but it fails to take out this high, right? Then it created this as well. Now this higher high, it took out this. So a new higher high has been formed here, right? Then let me just mark it. The marking is making it slow. Create a new higher high here, right? But meanwhile, there's a higher low here. High, higher low, higher high here. Then this higher low is equal with this, right? Okay. Then higher high. So this is the previous low, right? Higher high, low. Okay, this is our previous low now because a new low is formed. Then this is our high. Our railroad track is actually equal, right? So this previous low was taken out. A new one is formed here. So you now know that the trend wants to change. From here, it's been going up, up. This is an uptrend. But from here, since this previous low was taken out, you have it in mind that the trend wants to change. So if this is taken out, if this is taken out, if it's taken out, so your movement, it has changed, right? Our lower low is here now. It's just fractals. But you can swear mark it, but it's fractals. Okay? There's no single pin, there's no um engulfing here, there's no um 3-pin railroad track. You understand? So it's not a significant point. So we can mark this. Oh, why is this thing doing this way? We can mark this, right? So these are points, these are equal, right? Then lower low, lower high, lower low, lower high, lower low. This is lower high. Now it fails to take out this low. It created a higher low here, took out this low, higher high, higher low. That means trend has changed. Where did the trend change? The trend actually changed from where? This previous low, right? Low, high, low. So once it took out this previous high with this impulsive move, the trend has changed. So it came back, higher low, took out this previous high, higher high. So now you know that an uptrend, the market is already in an uptrend, right? So this is GBP USD. So it's still the same thing, but it's actually good to analyze from higher time frame. Time frame like if you're intraday trader, it's good to analyze from daily. Check out your trend, high, low, high, low, high, low, high, low, high, low, high. So this is the previous one, right? Okay, from here, low, high, low, high. This is the previous one. It failed to take out this low, create what a higher low here, but it took out this high. So from here, taking out this high, the trend has changed. Took out this high, form a higher low, took out the high again, like that. It made equal high here, took out the low down, right? But still came up, took out this high. So it's good to start analyzing from the top, from the higher time frame. It's good to start analyzing from it. Analyzing from higher time frame will give you an edge because the lower time frame actually respond to that of the higher time frame. Okay, so the same thing goes with whatsoever pair you're analyzing. Swing high, just try to identify the swing points: high, low, high, low, high, low, high. So high, low, right? Lower high, lower low, lower high, lower low, lower high, lower low. Now here is equal, it's made. So you put these two as a lower high from here. Let me mark it. It's equal, right? So it failed to take out this. So it's still in a downtrend move. Made what? A higher low here. Now it came here and it still could not break this point. So this point is actually a strong resistance level. It hit there, formed a higher low before it took out the high. You understand? So from this point, we should expect an uptrend movement, bullish run. But you will have to still wait for it to create what? A higher low here around maybe this rejection point. We have different rejection points, but we'll get to that video soon. You know the exact point the market will reject from before going up, right? So this is the move. This is the move. Once you can analyze from your daily or your weekly, depending on the kind of trader you are. If you're intraday, if you are uh, long term, anyone you want, you just use your time frame. But if you're analyzing with daily, your trend, to get your trend, whether it's an uptrend or downtrend, you use your daily. If you're a day intraday trader, your setup will have to be what? H1. Then your entry will have to be what? M5. But if you are a weekly trader, your trend will be from weekly, setup H4, then your entry M15. Okay, but we'll get to all that. I'm just actually trying to show us how to identify our trend, right? Now, sometimes the trend will not be clear. Do you understand? Your movement will not be clear. Your uptrend, you will not, it will not be clear to get the swing point. So there's no need to force your chart. If you see that any chart is not clear, there's no need to force it. Just leave it and move on to the next. And this is a range. This is a ranging market, right? It's ranging. So sometimes if the trend is not clear, if your trend is not clear enough, there's no need to force them. There's no need to force your trade. You are not having trade. The market is always there for you, okay? The market is always there for you. So if whatsoever pair you want to trade, whatsoever pair you want. I know there are some people who actually love trading just a particular pair. They love trading a particular pair. Um, okay, so this Euro USD, let's see. This is our low, high, higher low, higher high, higher low, higher high, higher low, higher high. It came here to the equal zone. See, it's equal. This is just a week. It doesn't mean it's equal. It came here and retest the zone. So it's equal here, but it's broke this zone, made higher high here, made. So it's actually an uptrend market. So if you've confirmed that the trend is uptrend, what you do is just come here. Now you check the movement to high, low, higher high, right? Low, higher high, low, higher low, higher high, higher low, but it failed to create a higher high here, just ranged. But it has not taken out this low, this previous one here. So high here, it took out this one, right? Create this thing, but this is a false move. You think it wants to change and start coming down, but it came back, retested the same zone, it didn't break it again, it went up. Create a higher high here, a higher low here, sorry, then a higher high here, higher low, higher high. So mind you, we've already checked from D1 that is what an uptrend, right? So your setup now, what you'll be looking for is what? Buy, a buy setup, since your daily has shown that it's an uptrend. So you will not have you don't go against the trend. It's not advisable to go against the trend, okay? So you could just master your try to point out the swing, high, low, high, higher, low, higher, high, higher, low, because it's not actually equal, okay? It's higher, low, right? Higher, low, higher, high, higher, low, lower, high here. This is a low. It fails to break the high, and this is higher low. This is a ranging. See, look, it's ranging here. That ranging, I told you that there's one that there is one that will not go straight, like it will not be ranging like this in a straight form. The previous one we saw. But see, there's a range going on here. Range before it broke out, right? So this from this, you know, it's an uptrend too. From your daily high, low, high. This from here is a bearish move, right? Then this is the last previous lower high. If the market breaks this, meaning that trend has changed. This one, it came here, it could not break. It retested the same points, came down, created a higher low, then it now broke, created a higher low, then started, meaning that your trend has changed, right? So for this first video, we'll just be looking at our market structure. The ability to identify market structure, it will help you a lot. It will help you a lot. So low, high, higher low. Let's check if it broke. So it took it out with a week, right? It's still the same zone, right? So you can as well mark this that is equal. You can mark it is equal. Then there's actually a range here. These two is equal, right? Okay, it's not equal. It's not equal. If you put it very well, see, it's not equal. This is a higher high. This point here is a higher high. It's higher than this low here, so it's not equal. So failed to break, made equal, now broke, higher high. So uptrend came down, higher low, failed to break the up one. Instead, it broke this previous higher low. So trend has changed. Came up, lower high, lower low, lower high, failed to take out the low, made higher low here, took out the previous low, trend change here, but it's not confirmed. It makes two higher low and two higher high. Do you get? If it makes two higher high and two higher low, it's a confirmed market structure. That's what we call confirmed market structure. High, low, higher high, lower low, made this one here. So this is a confirmed, it's confirmed that the trend is bearish. Makes two lower high and two lower low. Trend is confirmed. Okay. So for this video, it's just our market structure. You able to identify your market structure from daily to get the trend, right? If you can do it for daily very well, you can mark it very well. So if you see this is a range, it's ranging, but it's still going up, right? It's just fractals, not really a swings. Okay, so I'll end this video here so that it will not be really long. So you just have to practice your structural points. If you can get your structural points very well, get your highs, get your lows, mark it to know your trend. Once you know your trend, to get your setup from the setup time frame will not be difficult because you'll be going in line with the trend, right? Either you are getting your trend from your daily, like I said, or your weekly. Now, if you are using your weekly, your setup will be from H4, right? If you are using your daily, setup will be from H1. But as times goes on, if you start getting used to the market, you'll be able to inter switch. You'll be able to make use of your time frames. You can even check H4, H1, M5, M15. You can check both. But for now, you can just stick with the timings. Okay. So once again, thank you so much for your time. Thank you so much for your time and lecture and your patience. Sorry. We'll meet again. We'll meet again.